I want to highlight how to assess the market's reaction to a stock split announcement, how to assess the market's reaction to a stock split announcement. So number one, we want to consider the introduction. So when a company announces a stock split, it often generates significant market interest. People become more interested in the announcements. So understanding how to assess the market's reaction can help an investor gauge potential impacts on the stock price and overall market sentiment. Number two, so what is a stock split? What is a stock split? What is stock split? So a stock split is when a company issues additional shares to existing shareholders, lowering the price per share without changing the total value of the company. The company's value remains the same. Only the share outstanding, varies. For example, in a 2-for-1 split, the share price is halved and the number of shares, doubles. The number of shares doubles. In a 2-for-1 split, if the company is selling for maybe $10 per share and it's a 2-for-1 split, there's an additional shares. So you end up having 2 shares now of $5 each. So there's an increased stock price share number of shares, but the overall value of the company remains the same. Number 3, immediate market reaction to a stock split announcement. There's always an immediate, market reaction to a stock split announcement. So in this case, you look at price movements. After a stock split announcement, the stock prices often sees an initial increase, but this is largely driven by investor sentiment and market perception. However, the actual intrinsic value of the company remains unchanged. You could observe reactions around the share price temporarily, but the company value remains the same. There's no change at all. Then investor sentiment. If we consider price movements, we want to look at investor sentiment. So a stock split may be perceived positively, especially if the company has shown, strong growth, signaling that the company's, that the company may continue to grow in the future. This can lead to a temporary price bump as investors, expect continued, positive performance. Number 4, analyzing the long-term, market impact. Analyzing the long-term market impact of stock split. So in this case, we want to highlight, post-split price behavior. What is the price behavior of the company after the split? So after the split takes effect, it's important to track how the stock behaves in the week or months following. How does the stock behave after, the split announcement? So a sustained upward movement might indicate that the market perceives the stock as more accessible, while stagnation or decline may signal that the market sees little real value, added by the split. It all depends on how, the crowd perceive, the nature of the split. Then there's market liquidity and volume. Market liquidity and volume. So a stock splits, often leads to higher trading volumes as share becomes more affordable, and more accessible to a broader range of investors. So trading volume, can help assess how much investors investors develop interest, in the split announcement, and how they equally respond to the announcement. And they may equally take into consideration, the actual fundamentals of the company. or else they may end up taking a wrong decision. Please like this video and subscribe to this channel. Number 5 is factors influencing the market reaction. Factors influencing the market reaction. In this case, there's company's growth and earnings. That's what usually should be the core, influencer of companies and perception. So if the stock split announcement comes after a period of strong performance or positive earnings report, the market reaction is likely to be more favorable. Conversely, if the company has been underperforming, the market may not, view the stock split positively. They will view the split with skepticism. They become very skeptical of why the company is undertaking a stock split when the fundamentals is quite poor. Then there's this broader market conditions. Broader market conditions. The overall market environment can influence the stock, the stock's reaction. For example, if the broader market is experiencing a downturn, a stock split announcement might not have the same positive effects if if the market is generally strong. So the reaction may even depend on the overall market's environment, the overall market performance. So we look at our competitor and industry trend. Competitor and industry trend. It's also important to consider how competitors or the industry as a whole is performing, not just whether the company undertook a stock split or not. As if a company is outperforming its peers and announces a stock split, it could be seen as a sign of strength, which may positively impact the stock price. Number 6, short-term versus long-term impact. Short-term versus long-term impact. Please don't forget to subscribe to this channel and like this video. So short-term versus long-term impact. In the short term, a stock split can cause a surge, in interest and price, especially if the company has a strong brand and a positive market sentiment. Then in the long term, over the long term, the stock split impact may diminish as the initial excitement fades. The long-term price performance will depend more on the company's fundamentals like earning growth, like a strong balance sheet, like a positive cash flow, and overall market condition. So in conclusion, assessing the market's reaction to a stock split involves monitoring the immediate price movements, trading volume, as well as overall investor sentiment.